And gentlemen, welcome back to the channel. There is a stock that I have invested over $100,000 in that announced major news today. And it makes sense why the stock was only down 1.87% when a lot of its peers were down a lot more. Now, the stock recovered a little bit in after hours, and it's done very well in the past couple of days. Okay, on Thursday of last week, the stock was up 16% for no reason. There was no news that day. And then the next day it was up 4%. Today, slight little red. But here in this video, we are going to go over the latest on Rezolve AI. Now, Rezolve AI is one of those opportunities you do not come across that often, in my view. The reason this opportunity is so attractive, among many other specific reasons, is it's a pure play AI stock that Wall Street doesn't know about yet. And we'll discuss that here in just a moment. I think it's a massive opportunity. I'll share my positioning, the news of the day, get you guys caught up to speed if this is the first time you are hearing about this stock. Hit the like button and subscribe to the channel if you have not done so already. And let's get started. Like, honestly, when I seen this news today, I was quite shocked, okay? I've never seen a company say this, okay? Rezolve AI will release its financial results for the first half of 2025 before market open on Wednesday, October 1st, 2025. Okay. Rezolve is going to report October 1st. Nothing too crazy to see there. Well, in their presentation here in this image, they say that Rezolve AI to announce strong first half 2025 results and accelerated growth momentum. So basically the company is saying, guys, we're about to raise guidance. Guys, we're about to have some great earnings. Guys, pay attention to us because things are accelerating. That's literally what they are saying. It's crazy to me this post only has 1,343 views or impressions. Literally nobody knows this company exists. Okay? That's where the opportunity comes along. People ask me all the time, do you like NVIDIA? Do you like Palantir? Do you like BBAI? Do you like Tempest AI? Do you like SoundHound? Do you like XYZ company? Yeah, the answer is yeah, I like all of those companies. But I don't like them for an investment because everyone likes them for an investment. Where you really make a fortune in markets is being early, okay? Being early to spot something, okay? Like if you were early in 2021 or 2022 to spot that AI was coming and you bought NVIDIA, you bought Supermicro, you bought these Palantir for that matter, you have made an absolute killing. If you bought them in 2024, 2025, you may have made some money, but you did not do nearly as well, okay? So literally Rezolve AI just said today that their growth is accelerating. Okay, so here's the deal. The company really started launching their products for the market earlier this year, in like the first quarter of this year. Okay, they started the year with a $70 million annual recurring revenue target for the end of the year. They came out last earnings and said they've already hit 90 million, that they are on track for over 100 million by the end of this year. So the guidance was 100 million, okay? October 1st, they're probably going to raise the guidance, in my view, anywhere between 200 million and 300 million for the end of this year. Now, I think that we might get some loose guidance for 2026 as well. For an example, we might get Rezolve AI and their management team that says something along the lines of, if this growth continues at this pace, as we expect it will, we could see over $1 billion in ARR by the end of 2026. Some kind of loose guidance, like not putting it as a guarantee, like just somewhat of a projection, okay? Forget about that. That could be big if it happens. I don't know if it's going to happen. But at this point, you could be looking at anywhere, again, from 200 million to 300 million for 2025 end of the year guidance. Now, if you look at AI stocks and how they trade today, most of them trade between 12 and 20 times sales. Rezolve trades significantly lower than that. It trades around 7 times sales. I think it should trade around 10 times sales or a market multiple to its peers. Just to be conservative, I use a 10x price to sales. That would be a $2 billion market cap. Today, the stock's around $750 million market cap. So divide it by 2 billion, and you're looking at, oops. Did I do that wrong? I think I did that wrong. No. So you're looking at a 2.66x from here. The stock is $3.68. That would be a $9.81 stock by the end of this year. Okay. Now, if they throw around some loose guidance for like $1 billion in ARR, that's where things get crazy if Wall Street like believes what they're saying, because all of a sudden that would be a $10 billion market cap. Okay. Divide that by 750 million. That's where the returns, even in the short term, could get redonkulous, right? That'd be a 13.33x from here. That would put the stock at $49. Okay. Those are the kind of upside targets that we're looking at, even in the relatively, short-term horizon. Okay. If they throw out $500 million for next year, something like that, that could also be exciting. Now, I think the company did this on purpose by not giving earnings in September. A lot of people were expecting earnings in September. I think the company understands that September's a bad month. Doesn't take a genius to look on X and see everyone talking about September and how it's going to be a bad month, or to watch CNBC. So the company literally is reporting on October 1st. That is a great decision from an executive perspective, but give you a little bit of a heads up that you can expect a guidance raise. You can expect a strong first half performance and accelerated growth momentum. Now, the company has had a lot of good news recently as well, or recent news that is important to also pay attention to. So just like 2 or 3 weeks ago, the company inaugurated its Asia Pacific headquarters in Singapore, backed by a multi-billion-dollar investment from the Singapore government. They actually bought another firm. See if we can pull this up. Okay. Visense. So the acquisition was announced in August of 2025. Visense visual search and multimodal AI expertise will allow Rezolve AI to expand its capabilities in image-based product searching. So they essentially bought this company and are taking over the headquarters in Singapore. Okay, so there's some exciting stuff going on there. The company has recently been included in the Russell 2000 and Russell 3000 indices as well. And they, back in March, completed their acquisition of GroupBuy, a commerce search and product discovery platform. The deal is intended to strengthen Rezolve AI, AI's driven commerce capabilities, including personalized shopping experiences and product recommendations. Now, in recent news as well, on July 12th, Rezolve AI launches their global professional services division for AI growth. So this is an interesting sector. They're going to be essentially competing with companies like Accenture, even something like maybe like a Salesforce. Okay. They have recently poached some executives that used to work at Accenture. This is a $500 billion opportunity. This is really in addition to all of the other positive things going on, because this just launched, and I'm not sure how they're going to incorporate this into guidance, or how this is really going to affect CapEx, okay, or profitability, because this new venture typically takes more money to like be profitable, right? It's a little bit more competition. Okay, they don't have a lot of competition in their AI, commerce business. Now, they appointed Savik Banji to lead the division's efforts. Banjiri, formerly the global commerce head at Accenture and founder and CTO at Tata Digital, is now the president of Rezolve AI Global Professional Services and chief digital officer. The new division will provide a range of services designed to help enterprises effectively integrate and utilize Rezolve's Brain Suite AI technology. These services include C-suite advisory on AI roadmaps, data, architecture, readiness assessments, tailored Brain Suite model training and integration, as well as change management and continuous optimization. So it's another massive market opportunity that Rezolve is just now starting to tap into. And again, I want to be very clear. This is not like, I'm not just making a video on this company because I think their earnings are going to be good and the stock's going to go up. Yes, I think that is going to happen, but I think this could be a longer term winner. The reason Wall Street doesn't know about this company is because they went public via a SPAC. And when they went public via SPAC, they had about a $2 billion market cap. So the valuation, as almost what always happens when companies de-SPAC, they go down a lot, okay? Because Wall Street wants to stay away from de-SPACs for the first year. For the first year, the SPAC company has the main seat on the board, for an example. Like the company doesn't have any real control over itself, for just one example. There's other things that happen during a de-SPAC. That is over with. They don't have any of the de-SPAC requirements still on them. So they are now a just purely publicly traded company that operates their business, okay? Just like any other stock. Well, what's happened in recent weeks is Citadel bought 7% of the company at $2.50. I said when that happened, which was essentially like no premium, like Citadel did not get a deal on their position. They essentially like said, okay, we'll pay market price. We want to buy 7% of your company. Boom, boom, bam, deal was done. Okay. I said then that was a pretty damn surefire sign that we're going to get good earnings. We're going to get some kind of good news. And well, via today, it looks almost certain that we're going to have some exciting things to talk about coming October 1st. Now, again, I think if markets were not super red today, Rezolve probably would have went up 20%. Like on the next green day, don't be surprised if Rezolve is having a big green day. Now, something that's unique to Rezolve as well is it doesn't have a lot of retail investors that know about this company as well. It only has 6,000 people that watch the stock on StockTwits. Since 1:30 p.m. today, there's only been 14 new posts on StockTwits. There's not it's not a lot of retail on this. So wait till retail gets involved on this. Institutions have started really buying. The 13F filing was incredible. You could actually see that here if I can pull it up. Link might be a little bit old, but 13F filing is all green. Like they're going out and they're buying a shit ton of this company. Citadel, Goldman Sachs, Jane Street, Morgan Stanley, like they're all loading up. And that's by design, right? They load up and then retail bids the stock up and they get out of their position, right? Like that, we know how these things work. You're in the very early stages. Now, in this portfolio, I'm currently up 32% or $9,831. Current value is $40,588 in this portfolio, invested for 74 days, and have 11,000 shares. Average cost basis, $2.80. So yeah, it's done okay in recent weeks, but we're just getting started. Again, that's just my opinion. I'm not a financial advisor. Like, could I be wrong? Of course. You got to come to your own conclusions and do your own research when it comes to these smaller companies. Now, in this portfolio, I'm up 31.01%, up $11,354. Current market value, $47,968, so almost $48,000. Average cost, $2.81. Own 13,000 shares, and I do have 15 of the February 20th, 2026 250 calls. Currently up about 31.5% on those, or up about $500 with a current value of about $2,100. So that is about $90,000 roughly of the position. And then the other parts are in Webull, Thinkorswim, got some over there as well. And I'm not going to pull that up. But yeah, we are heavily invested in this one. I think it's one of those opportunities you just don't get very often. And when I see an opportunity like this, I like to take advantage of it. Last time we had an opportunity like this, it was Nebius. I was making videos about it on this channel in the 20s. Today it's what? Where is Nebius at? Let me pull up Nebius, our long lost friend here. Now it's $66. It hit a high of 76 recently. You know, I was making videos on this thing back in April, right? When it was $20, $22 a share. Like, when you spot these opportunities, well, hey, I like to take advantage of them. So not a recommendation, not financial advice. You could lose all of your money. Don't be a jackass, right? That's just what it comes down to. Don't be a jackass. Like, what somebody says is not guaranteed. It doesn't mean that this is God speaking to you through somebody. Maybe it is, you know, like, man, maybe it is. I don't know. But if you lose your money, do not be mad at me, because I lost my money as well. So yeah, hit that like button and subscribe to the channel. If you guys want to come trade with us, check out that link down below in the description of today's episode. I share when I buy, when I sell, when I invest in a new stock, option, crypto, short-term, long-term stuff. Come get involved with that. Again, link down below in the description of this video. Have a fantastic evening, ladies and gentlemen, and I will see you in the next one.